this morning's U.S. Bank Economic 360, there's been quite a bit of action in recent days in an effort to get things moving around the world, specifically in Europe, where the economy has been especially bad. U.S. Bank investment analyst Jim Russell joins us now with perspective on what this means for all of us and what we should be watching for. Good to have you with us, Jim.
Good morning.
Talk about some of the action where these various governments are trying to bolster the economy, especially with elections going on in a lot of countries.
Yeah, that's a great point, Brian. Let me just state first that it is an election period for many of the countries around the world. In fact, 7 of the G20 countries will have elections, of course, including the United States. And 50% of global GDP, or gross domestic product, have elections this year. And of course, that would include the United States as well. So it's really no coincidence that governments, at the very time that elections are occurring, are trying to get economic growth a little bit on the high side. Now, the central bank in the United States is called, of course, the Federal Reserve. And they, last week, started a third program that is likely to help homeowners in a variety of ways, and we'll talk a little bit about that. But let me also say that the Federal Reserve's mission, the reason for being, are twofold. Number one, stable prices. Inflation's at 1.7, so they pretty much accomplished that, but also full employment. Unemployment, unfortunately, has been above 8% for 43 consecutive months, and so they're working on that initiative with this latest program.
All right, we should point out that the Fed is supposed to be apolitical, right?
That is correct.
It's not tied to a political party. And yet, in an election year, the economy is always the #1 issue. We're watching the Fed. There's been some decisions and some talk this week.
Right.
What is exactly going on with the Fed, the Federal Reserve, and how is it affecting the economy, or will it?
Great question. The Fed has announced a third bond buying program. A fancy word that's commonly attached to this bond buying program is called quantitative easing. And so what the Fed does is go out and they print money and they buy bonds in the open market. That keeps interest rates very low. This third version, which was announced last week, specifically targets mortgage bonds, which will keep mortgage rates very low for an extended period of time. About a year ago, 30-year mortgage rates were at 4.1. Right now, they're in the 3.55% range. So already starting to work toward that. Of course, if housing activity picks up, that creates economic activity. Economic activity creates jobs, which is what this is all about.
And of course, we're all winners when there are more jobs.
Absolutely.
And more economic activity. That's all the time we have, Jim. We appreciate you and U.S. Bank. Thanks for being with us today.
Thank you, sir.